Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today, Wednesday, halfway through the month almost, July 14th, 2021. Brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, NMLS number 2289, and panel consisting of, good morning, Becky Alley.
Good morning, everyone. It's like the whole gang is here. I'm super excited.
Yeah, good morning, Lisa Lawson.
Morning, everybody.
Good morning, Mr. John Kolb.
What is happening, family?
Good morning, Harvey Freed.
Good morning to all.
So it's been a long time since we've all been together. Becky, Lisa, John, Harvey, myself, all in the same, podcast squares. I'm sitting in the podcast room here at Capital Mortgage Funding headquarters. Roberto Beauchesne is our producer director. Give a shout out to Roberto. Well, panel, we have a lot to cover today. Lots to go over in the market, purchase market, refinance market. Real estate is very, very strong here, and it is all around the country. But more importantly, rates. Rates right now are a hot topic of conversation. What is the Federal Reserve going to do? Are they going to raise rates? Are they going to stop easing monetary policy? We had a very strong week in the interest rate department last week. Rates actually went down, but then at the beginning of this week, rates started going up. So subjects that we're going to talk about today, ladies and gentlemen, I'll start off with you, Becky Alley. Refinance applications due to interest rates dropping last week they were plentiful. The volume was going up, but it always seems like, and we talk about it, rates aren't going to zero. They're actually going to go up. Why are people waiting when they believe, they think rates are going to go down to zero, but rates are now trickling up there? Look at why are people still waiting, Becky? I mean, what's going on? Is it just human behavior?
Listen, if you are talking about applying for a mortgage because you heard the interest rates are lower last week, you're late. You're behind. The time is always now, because as soon as an article comes out that rates are doing this or doing that, it's yesterday's news. There was a little bit of a decline in mortgage applications 2 weeks ago because of the holiday. We kind of picked things up, but to Harry's point, yes, mortgage applications are higher this week because of last week's rates, and rates are about an eighth higher just from Monday to Wednesday. Just that week, so you need to work on it, and you need to start looking at things faster. If you're waiting for that moment where someone's telling you now is the time, if someone's telling you now is the time, you missed it. So you need to make sure that you're proactive, because we always talk about the rates. You never know what they're going to do. We've all been around where the rates have been high, they've been low. And right now you are in another perfect pocket where it's still going to make sense. But we have no control of the government. We have no control over what they're going to be doing with these rates and how long they're going to stay at these lows. There's lots of inflation. There's a lot of scare tactics going on, and we're here to assist you. So if you're looking to purchase or refi, start the conversation today versus yesterday.
That's such a great way to put it. I think Becky put it very, very nicely, Lisa. And Lisa, it goes something like this. If you've read it in a newspaper, you read it online, you read it on Twitter, you saw it on TikTok, you're watching it on YouTube, it's old news already, right, Lisa? It's just old news.
It's old news. If you've already seen it, 3 days ago, 3 weeks ago, your friend saw this or you got this, it's old news. Only what matters is what's happening today. And making sure that you're prepared to take advantage and get the best rate you possibly can means being prepared, getting your docs in. So you have the opportunity to lock as soon as possible and make sure that we're doing good by you and that you're getting everything that you were expecting.
Yeah, something that's not old news, Lisa, John Kolb, is that, and this is a crazy thing, read this today, the inflation data and the Treasury bond auction, the Consumer Price Index, one of the main inflation benchmarks, rose. That meant it went higher at the fastest pace in nearly 30 years, which is causing the excitement in the bond market and pressure on the Federal Reserve to go ahead and tighten their monetary policy, causing interest rates to go up. So when you see a headline that is current that says, hey, John Kolb, Harvey Freed, Lisa Lawson, and Becky Alley, and all our clients out there in mortgage land, inflation is rising at the fastest pace, John Kolb, in 30 years. What are we telling our clients to do?
I mean, we tell them the same thing we always tell them is we tell them to lock, just to make, get off the fence and lock. But inflation increasing the fastest in 30 years is not abnormal when you had a stalled economy for the last year. I mean, so basically it's playing a little bit of catch up with the inflation numbers. And the Federal Reserve has made it very clear that they want to continue to keep interest rates low. Whether or not they live up to their word, who knows? The government never really does sometimes. But we got to just keep in mind that everything is coming back into a full force transition from being off and nothing being done in the last year. So I think those inflation numbers are probably a little skewed and inflated. Inflation being inflated, I said it. You can quote me later. But you know what? We'll see. They may come back around a little bit.
All right, that is John Kolb, everybody, on the status of inflation and the bond market. Mr. Harvey Freed, you had a great week last week, real life instances, a lot of great purchases, what you're seeing out there. But the refi market, we'll move into purchases next. So stick with refis for a second with me, Harvey. Why, in your opinion, you've only been doing this about 30 years. Why, in your opinion, do your clients wait till they see something about rates going down before they actually pull the trigger? I mean, what do you tell your clients day in and day out when it comes to refinancing at crazy low interest rates?
Yeah, still at crazy low interest rates here. Human nature is, they don't feel a need for it right away. The kids are going to camp, they're in school, and it's just life. And many adults, running around chasing the kids to the sporting events, and they finally get down to it and they realize, look, my credit card's a little out of control. I need to do that debt consolidation loan. And eventually they make the call. It always kicks us when we see that maybe they could have done it last year and now they're calling to do it this year, but it's never too late. And the sooner a family would go ahead and take a look at making that phone call us at Capital Mortgage and take a look at the debt consolidation and see if they can reduce the term of their mortgage also, they can really put themselves and their family ahead of the game and save a ton of money.
Yeah, great comments, Harvey. Good morning, everybody. For those of you just joining us, it is July 14, 2021, mid-July already in the year of 2021. Lots to go over this morning. Capital Mortgage Funding brought to you by Fairway Independent Mortgage Corporation, Equal Housing Lender 2289. Becky Alley, I was thinking about this on the way into the office today, setting up our podcast today. Should I sell? Should I buy? What is really happening out there? You always hear this now. It's a great time to sell, but is it a really great time to buy? What should I do? What's going on in the real world? What's really happening out there? Should I sell? Should I buy? Where am I moving? Should I rent? What am I really doing out there?
Well, coincidentally, I actually just got off of a meeting with 3 different realtors, and one of the topics was, what is really going on with the market? Do they think the market is still as hot as what it was? And, what's my interpretation of what the market's doing versus what what their interpretation is, right? And their all responses were pretty unified, where they feel the market has slowed down, but not slowed down to the point where now there's no 0 offers. Whereas before they might have been getting 20 offers, now they're getting 10 on one home. And they think that some of that has to do with the buyers' frustrations of them being beat up for so long, of having to come in, over asking tens of thousands of dollars. And not everyone has that kind of money to do that. So they feel that some of the people that were in the market have kind of taken a step back to kind of just regroup and figure out what their game plan is. I mean, so there's always a good time to buy and sell, but it's a matter of what works best for you, right? So it's, we preach on now more so ever, you have to love where you live. And if your house isn't going to check all those boxes, and then obviously you're going to enter that buyer school, but they can't create more inventory right now. So even though more inventory is coming on, we're still at such an unbalanced market where there's more buyers than sellers. And so you have, you still have people missing out on some of these offers or having to put in multiple bids to get accepted. So, they felt that it was less offers, and it's getting a little bit harder for sellers as well, because they feel like some buyers are even backing out. They're getting a little bit more particular as far as they're not bending over as backwards to accommodate these seller demands.
Yeah, such a strong answer, and all the connections that that you bring, Becky Alley, Lisa Lawson, John Kolb, Harvey Freed, myself. You're looking everybody out there and you're listening to, if you're listening to the podcast, you're watching a simulcast, whether it's on YouTube, Facebook Live, you're looking at over 120 years in the mortgage industry. Just trying to bring you the best information out there, objective, hardcore information, honest, and really trying to set you up for success. And, if that's the case, and Becky brings up great points, Lisa, but let's just say that's the case. Let's say the case is that the market might not be as on fire as it was. It's still strong. It's still hot. And let's say there are some people, Lisa, that are going to be on the sidelines, right? So if it's slowing down even a little, and this is just my math, okay? If that's the case, wouldn't there be more homes coming on the market? I mean, sooner? Can we expect more homes coming on the market, Lisa?
Well, I've learned to never be surprised in this industry. In theory, I would say yes, you should, because people, obviously you've got kids who might want to move school districts, and then summer before fall is a typical time where, everyone's trying to move. But what we've learned after this pandemic or during the pandemic is things have not always played as planned. So, I do think there is a little bit more out there, the numbers are showing it, but that doesn't mean that trend is going to continue. This is a very kind of uncertain market. I can't tell you that people will continue to have an increase in inventory all the way through December. Who knows, but if you find something that you like, this would be the time to do it. The rates are phenomenal. We can't predict what rates are going to be in the future, but I can tell you they won't be this low. If you find a home that you love, it's about making it a home for you, not necessarily, well, I'm going to wait till next month because I think there'll be 3 more houses. Well, what does it matter if none of those 3 extra houses on the market are the one that you want? Yep. So time is of the essence, and I would say get out there and do it now.
That's such a great, I love that attitude because, what are we waiting for? I mean, if the time is now and you want to buy a house, you see something you like, it's in your budget and you can make it work, why not buy it now? So John, I don't remember when you were growing up, people would say, what is normal? I mean, people always, I want to be normal. And I always went with the philosophy, what is normal? So I'm going to pose the question to you. In this market, coming out of COVID, is there really such thing as a normal market? I mean, what is normal, John Kolb, for the real estate and mortgage industry right now?
I mean, that's a question with a million different answers. The new normal right now is just, get out there and try to make sure you're enjoying your living space, and make sure that you're can enjoy family being around more often than not. Spending more time together. And I think that's the new normal, is making, whether you do it through a sale and a new buy, or you do it with cash out and adding on through a construction type loan. People are just trying to make their home more livable for everybody so that they can enjoy it spread out and everybody have their own space. When you talk about how quickly things are selling or how quickly people are trying to buy, I think that's obviously, we came out of the gates like wildfire this year. And of course it's going to slow down a little bit. And I think it'll get back to the standard of houses being on the market for a week, 2 weeks. And that's just, what it is. And what we are still seeing, and I think everybody can attribute this to just the quality of sales out there. People are just putting their pieces of crap on the market, thinking they're going to sell the top dollar. Well, those are the homes that are sitting. The homes that are really flying off the market are the ones that are well kept, done right, and make sense and updated. Because, if you're talking about having to move into a new house and have to update it, it's going to cost you a lot more money to update right now with the cost of materials and trying to get into a contractor. I can't even get somebody to call me back on a generator right now. I've had lost power twice in the last month, and people aren't even calling you back. That's just the way it is out there because everyone is so busy.
Yeah. Hey, Harvey, you're big on that. We go around on the weekends. We drive neighborhoods. We look for sale signs. We drive in specific areas to make sure that the information we're bringing to everybody is very, very accurate. And you built 3 or 4 different houses, and you're pretty well versed in new construction. Doug Duncan, Fannie Mae Senior Vice President and Chief Economist, says that there's going to be continued high home buying conditions. The expectations for demand for housing are going to persist at an elevated level, and interest rates are going to remain at near historic lows. Okay, so all that adds up for you, Harvey Freed, to what?
To a lot of business over the next few years, that's for sure. The Harry, you say could go up a little bit. There's no doubt about that. But even at 4.5%, maybe that's even a full percent higher than they are or near today. Yeah, it's going to be rambunctious. Families are looking to put their kids in the best school districts, start their lives. People are getting married and starting families. This pandemic is going to probably start a lot of these get-togethers where more and more families are coming together. And yeah, housing is just going to keep flourishing. They can't build them as fast as they need to, Harry. So we're going to be busy. There's going to be a lot of competition. And that leads me to actually talking about why people really got to get their ducks in a row and maybe really work on that credit to put them in a better position to be more competitive against all the other families out there that are going to be bidding for these homes.
Yeah. Hey, last week we had on the show, I mean, if anybody tuned into the Hardcore Mortgage Real Estate Business Show, 97.1 FM, every Saturday from 9 to 10, we have this panel on. We have various guests. Last week, Becky Alley, we had Mike Pageant from Visions Homes LLC in Sarasota, Florida on. Builders built a lot of homes. He's a lifelong builder and resident of the state of Florida. We went over some material costs. He said lumber is coming down, but certainly builders, and this was his quote, not ours. He said builders are not going to pass on the savings on the lumber cost. Okay, he said that the cost and the cost to build a house is going to remain high. So sharing that theme with everybody and recapping that show, it was a very good show. People should go back and watch the show from last weekend with Mike Pageant and Vision LLC. What are you seeing in the new construction market, Becky, and in the current market that you had the conversation with those three realtors today? Where do they see new construction going?
They, on that topic specifically, I mean, they felt that, new construction, like, they're not going to be able to put them up as fast as they need to, right? So in some new constructions, I mean, you're looking at, you sign a contract today, that home is not going to be built until a year later, right? Because, we talk about the time where it's like you can have a quote and you can want something done to your home, but by trying to get someone out there and try to get the workers out there, the skilled trades field right now is lacking true professionals, and they cannot put these houses up, fast enough. So they were a little bit more advocating on, buying existing, as long as they had good bones and things like that. But new construction costs, they're not going to go down. Obviously the lumber costs, like you said, the savings is not going to get passed down to our clients. And it's very important that I have a client meeting with a builder today. And I, was very clear with him that you can meet with, go ahead and meet with them, but make sure what escalation clauses are going to be in that contract. If the lumber goes down, are they going to pass that savings to you? I was like, just might as well just bring it up. But if it goes up, how much is there going to be a cap on how much they can increase your sales price, at the 11th hour of your transaction? And these are things that you have to take heed to and are going to be a little bit of a risk when building a new home, because it is what it is. You want to buy a doorknob. If you can't buy it today and you got to buy it 12 months from now, it might go up 50 cents and there's nothing that you can do about that. So who's going to be fronting that cost? Is it going to be you, or is it going to be the builder? Are they willing to split the difference? So those are things that if you are looking to build, you need to have those conversations right now. You need to really look at those very wordy, lengthy contracts. New builds sometimes are up to 50 pages, and that's a lot of information. So if you're walking the plank alone, you need to make sure that you have a professional with you that can kind of weed through all that information with you.
And you really need to lock in that price now. And you need to have a clause in there that protects you if lumber prices start to rise. I mean, nobody can tell what's going to happen 9 months to 14 months from now that's how long it takes to build a house on average. But you got to lock in the price, lock in your upgrades, lock in your material costs now, and make sure it is ironclad in that contract so it doesn't go up. Very strong advice, Becky. Lisa Lawson, you are one of our government lending experts in our office. You do a lot of FHA. You're very fluent FHA, VA, and Michigan State Housing Development Authority loans for purchase transactions. We have seen our pie increase on FHA, VA, and MSHDA loans. Low down payment options, flexible credit. You love working with those programs because for you, the satisfaction of qualifying somebody that otherwise wouldn't qualify conventional, share that experience and what that's like.
Yeah, especially with Mishta, realtors right now say, well, you're never getting an offer accepted Mishta, and that's absolutely not the case. Even though we're in a competitive market, I have deals closing right now this month and last month that Mishta down payment assistance was a part of. So it's about structuring and understanding the program. But nothing, I think that not just me, but every loan officer.
Oh,
We lost her.
you muted. Lisa.
Well, we'll go on.
Yeah.
All right, here, I'm gonna play devil's advocate here and just say, hey, if I'm selling my house and I've got a 20% down offer versus
There you go.
a Mista offer, then I'm
that they're
not going with the Mista offer.
I'm sorry.
Oh, I said, sorry, you were gone for a little while, so I just jumped in.
Somebody was trying to call and it auto muted. My bad. I was just going to say I get great joy in helping somebody who thinks that they can't purchase a home. They don't have the money saved. They don't know how to save it. They might be paying monthly rent, $1,200 a month, and they just don't have the means to come up with a huge down payment for savings. But things like the Mishta Down Payment Assistance Program can really help those people get into a home so they become homeowners and not just renters.
Yeah,
Okay,
John
Lisa,
wanted to go ahead and give you a descending viewpoint. Go ahead, John.
Yeah, Lisa, I'm selling my house.
Mm-hmm.
And I've got a 20% down offer and I've got a Mista offer. Why would I ever want to go with a Mista offer?
Well, Mishta doesn't necessarily mean that it's a government loan either. You have a conventional Mishta loan. So you have a conventional with less down and a conventional with more down. It's obviously your opinion. And as we all know in this market, it's not always about down payment. It could be that you're selling your house, but you don't have a place to go yet. And maybe the person who's doing Mishta is going to give you the flexibility you need to find another house. We don't have to have a quick close. You know what I mean? There's all different other reasons why people will still pick up, that type of program. So like I said, it's not just based on down payment. We all know that in this business.
Mm.
And, sometimes a slower down payment, with Mishta, you can have up to $20,000 in assets. Sometimes people use that program so they can make appraisal guarantees because that is now allowed. And that allows somebody that says, hey, if the house appraises for 5,000, more, 10,000, whatever the number is, they're going to have those funds. Because sometimes that's also why we use that program.
There's your selling point.
That was a great pivot.
Lisa
pivot, Lisa.
Lawson, ladies
Look at her,
and
the
gentlemen.
pivot master.
If you didn't get the vibe on how much knowledge Lisa Lawson possesses, that's why we call her the Google of the office as well. Lisa, I want you to expand a little bit. Talk about VA loans.
What do you want to know?
I want to know.
VA loans are phenomenal, but it's funny because
Yeah.
we talk about that and we make the assumption that everyone knows that they have to be entitled to VA. Means you've had to be served in the military. Because I recently got a call the other day, like, oh, I didn't know I had to be in the military to get a VA loan. Yes, it's pretty basic. You have to be in the military, served. You can be in the reserves. But it's 100% financing. So you literally need no down payment. Now, that doesn't mean there's no closing costs because obviously there's other costs involved. But if you've been, served in the military, you active or you discharged, it doesn't matter, and you're entitled to that loan, I would definitely suggest taking advantage of that.
Yeah. Harvey Freed, you've been doing FHA loans for your entire career. When we hired you on almost 30 years ago, you said to me, Harry, I am an FHA expert. Harvey Freed, what makes you an FHA expert?
Well, at the time here, and really to this day, there's so many rookies in the industry. We're not sure that everyone is astute of how easy it is to get an FHA mortgage. Of course, we're always strong advocates for it and showing buyers, sellers, and the whole real estate community that this is another mortgage that'll help families get into their first home. So again, loan limits up to well over 350,000 across the United States. Here in Michigan, 356, 362 loan limit. This is the type of mortgage that we can close as easy as a conventional loan because the ratios they allow us are a little bit more flexible. The credit scores are more flexible. It's really a more flexible loan. And anytime we have an FHA client, that file will go as smooth as any conventional loan. So again, another reminder out there that if you're selling your house, take the highest and best offer. Maybe that FHA buyer has a little bit more flexibility, as Lisa mentioned, with their time when they have to close and allowing you a little bit more time to go find the house that you need.
That's wonderful. Listen, guys, I'm going to give you the last word. We're coming up on 11/27 on July 14, 2021, halfway through the month of July. We've got a lot of loans to close. We're doing a lot of business, and we're helping a lot of families and first-time home buyers getting into their house because our pre-approval letters are solid. We run them through our AUS system. That's an automated underwriting system. We also have them looked over by a real underwriter that is staffed by us. We do our own processing, closing, underwriting, funding here at Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. We have the flexibility to keep everything in-house. We don't have to ask for permission, everybody. And that's one great reason among a plethora of great reasons to use any one of our loan officers, particularly Becky Alley, John Kolb, Harvey Freed, Lisa Lawson, just 120 years of knowledge that you're getting from this group right here. With that, Becky, I'm going to give you the last word, and we're going to go around the horn, and then I'm going to sign off, Roberto. So let's be ready.
Yeah. So money is money at the end of the day, whether you are, going to be conventional financing, FHA financing, VA financing, you're to take care of the grant. We're here to assist you and make sure that your offer stands out the best that it humanly possibly can. We're available to take your phone calls. We're going to call your listing agents. The time is now, obviously, as always. I can't believe it's freaking July, everyone. My birthday is in 2 weeks, y'all.
Wedding's 5.5 months away. I'm ready. Let's go. You're getting married in 5.5 months. I can't wait.
I know, I'm excited.
Good. Lisa Lawson.
Yeah, I was going to say, this is really the time if you're interested in moving, if you're interested in taking cash out, making improvements to your house, consolidating debt, pick up the phone. It only takes a few minutes. And you may decide it isn't enough for you, or this isn't the right time for you, or there might be other things, but at least make the call and make an educated decision for yourself. Don't miss out.
Mr. John Kolb.
Hey, just make sure you're working with somebody who knows what they're doing. There's too many yahoos out there that just want to talk negative and be jackasses about everything. And, we are here at Capital Mortgage Funding, try to do the right thing, treat you the right way, teach you the right way, give you all your options. We are not salesmen. We're more concierge, and we consult to see what is best for your situation. So make sure you give us a call and find out how to do it the right way.
And Harvey Freed.
All right. On a funny note, we used to always joke in Michigan that, you don't want to buy a house and move in the middle of the winter. I don't know. That snow was looking pretty good compared to that pouring rain we've had in July. So the new Michigan norm is, hey, buy a house anytime, whether it be winter time, that snow. Sometimes you get a day where it's not snowing, it's cooler. It's easier to move in the winter. And again, you can avoid this horrible rainstorms we've been having all of July. The new time to buy now is winter time.
Yeah,
it wasn't April showers. It's
Easier to
July
move in the winter. Easier to move in the winter. I've never heard that before.
Why not?
365 around here, sir.
Hey, let's just go with it for Harvey today. All right, he seems like he's in a pretty decent mood today, John. So if it's easier to move in the winter, I'm all for it. I just think it's now is the time. I mean, you can't wait. But I will say, don't rush into anything. If you're on the fence and you're deciding that you want to wait, then wait it out. But if you have things in motion right now, rates aren't going to get better for you marketably. If they do, then you're lucky. You can always refinance after you close within a certain period of time or after a certain period of time. We all know that. But my last words for the day on 7/14/2021 are this. Market is still very, very strong. The realtors out there and our realtor partners are working very hard. They get a hold of us anytime, day or night, whether it's 8 o'clock at night or 8 o'clock in the morning, 10 o'clock at night, 10 o'clock in the morning. As of right now, we have no boundaries, and that's being exhibited every single day. We get calls every single day, day or night. Whomever you're dealing with, you need to have a relationship with that person, and you need to get things done. Don't wait, okay? Now, if you're on the fence and it's better, good. Do what's best for your own individual situation. So with all of that in mind, setting you up for success, 7/14/2021, I was blessed to be with Becky Alley, Lisa Lawson, John Kolb, and Harvey Freed, along with Roberto Beauchene, our producer director. This Hardcore Mortgage Real Estate and Business podcast brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, NMLS number 2289. Join us for the Hardcore Mortgage Real Estate and Business show this Saturday, 9 to 10. Harvey Freed, John Kolb, Becky Alley, Lisa, a whole host of people on there. We will see you then, everybody, and thank you for joining us.